Hi everyone, hope you're all doing well, and today I'm talking about the 5 stocks that I bought this week, and I've left the letter on for you guys to try and guess which ones they are. But yeah, I'll be talking about the 5 stocks that I did buy this week. As always, if you could smash the like button, and we'll take a look at these 5 stocks that I bought. Now, if you do want to keep up to date with what I'm buying, what I'm selling, then make sure you join my patrons group. The link is in the description. There's currently about 110 members on there, which is absolutely fantastic, and there's some fantastic content going on there. As well as knowing what I'm buying and selling, I also have a Discord group on there. We're also running exclusive Patreon content, which has question and answers on. We're also doing a couple of portfolio reviews on there. So I think for what the price is and the service that it gives out is fantastic. It can take you to the next level as an investor. But we'll stop promoting that and we'll get stuck onto the 5 stocks. So just in general, before I do say which ones they are, I still think it's key to make sure you've got a 20% cash pile there, because like I say, we could see this market go a little bit lower. And when my money is getting above that 20% cash pile, I am going out and buying a few more companies. At the moment, they're all quite small market cap companies with a lot of growth. There's not really big blue chip companies that are standing out to me. Visa was pretty close this week. That was one that was close to maybe being a blue chip that I do add. But there's not really any big massive companies that I've started to buy just yet, but I am keeping the cash reserve there just in case that happens. But there was a few companies with the stock market going down a little bit this week that I did pick a few shares up in, and I'll go through each one and kind of give a little bit of information on each one. If you do want to see a full video on some of these companies that I do talk about, guys, there is probably a full one on my channel somewhere about these, because I do currently own all of these companies already in my portfolio. I'm just kind of extending my positions into these. So number one is a Chinese company that I'm adding a lot into at the moment, because on this list I do see this one probably doing the best in like the closest rate, like over the short term. I do believe that this could be one of the best performers because of other things that are benefiting it right now. But Huye was another company I had more shares into. I am a big fan of this company and I think it will do really well over the next 2 years. So I bought this one because it has been down because of the stock market in general and because of the merger. But in the long term, I do think this company will perform very well. It has the upcycle of consoles coming out. The upcycle of consoles means that there'll be more games, more streamers, and also the growth of esports will benefit this one, because when you're a streaming platform like what Huye is, and you've got more people playing consoles and streaming and more people wanting to get into esports, it's just a bigger growing market. And obviously with Huye now working with Douyu, more than likely if the merger goes through, then obviously you've got kind of the big streaming platforms under just one name and they'll do fantastic. So I think Huye over the next 2 years is a company that I do see trading in the $40 range. So I am very keen to keep building up that position, because like I say, for this one, I don't know how much longer it'll be down at these sort of prices. So yeah, Huye for me, massive bargain. Number 2 is Gang stock, and I will try to do a video on DraftKings at some point, but I was buying more and more Gang. I am surprised how much this stock has gone down now. We are trading around the $14 range, even dipping into the $13 range, and I really did not see this coming back down to IPO prices, but at the same time, I will take it, because when I look at what Gang's going to do over the next 2 to 5 years, that's fine with me. I can make even more money. You know, something like a Pinterest, something like a Tesla. I was down 30% at one point, ended up making 250% profit. Pinterest, another company, I was down 30% at one point. In the long term, we're currently up 250%. Not currently sold that one like Tesla, but even so, you see, you know, in the short term you can go down, but it's all about that long term. We know we're not bothered about going down 10, 20, 30%. It's about making massive gains on the long term like Tesla and Pinterest. And this stock kind of reminds me of the early days of these two companies, not as in like a revenue kind of view or anything like that, but just kind of like in the position of there was a lot of doubt about these companies out there at the time. You know, people saying Pinterest can never be successful, it can never be like Facebook. Look at what it's doing now. Tesla, people were saying that Tesla will never able to get to mass production. Look at what it's doing now. And there was a lot of doubters about these companies, and now you see everyone loving them, going, oh yeah, they're absolutely amazing. But there was people out there back in the early days when they doubted it, and very much like Gang, it's a company that's been very doubted in the short term, but I believe they will absolutely smash it. Massive growth sector over the next 2 to 5 years, and I see Gang doing very well, especially at these valuations. So as much as I can add into Gang at these sort of prices, I will do. Number 3 was a company that I wasn't planning really on buying that much, but Dropbox, when it gets to $19, $18, is kind of, I'm not going to say easy money, but it is cheap. And at these sort of prices, this company for me, Dropbox, will be a $40 company in 2 years time. So when I can buy Dropbox at these sort of valuations, I'm very happy to get it, because it's a company with a very good balance sheet, a good growth model, and people doubt, once again, this is a company that's doubted because of Microsoft, because of Google, because of Amazon being in this sort of industry, but it's held its own for so many years, and it's just been disrespected on the share price front because of that, and it's carried on holding its own, and the growth is fantastic. And at some point the share price on Dropbox will move in the right way, because it can't carry on going cheaper and cheaper. You know, you look at the company now and the valuations it's trading at, forward PE it's trading at, and this company is still producing double-digit growth with an amazing balance sheet. So at some point for me, Dropbox is going to move in the right way and move to the right valuation. And like I say, when Dropbox gets to a $40 stock for me, I'll be happy to take my profit there, and I think it will get there within a 2 years time. So when it's at these sort of valuations, for me, Dropbox is another easy purchase. So I did pick some more shares up in Dropbox. And number 4 on this list is Lordstown Motors. So I weren't planning on buying this one, but because it dropped so much, I did buy some shares into it. I do want to be careful, because I believe this is going to be a very bumpy ride for the next year. And it's definitely a long-term hold. Like, if you're not willing to have your money in this company for a very long time, it's definitely not one for you guys. But at the same time, these are the sort of the companies that will give you their massive returns on the long-term side of it. So it's one of those, what your risk to reward capacity is. And I want to be careful with Lordstown. I don't want to go all in at once, because I do think it will be a very bumpy ride over the next 12 months. And even at these prices, it could go cheaper. And that's what I want to be careful of, and not put huge amounts of money in this one because of the volatility and where it's going to be over the next year. But in the long term, for me, Lordstown Motors has some really decent growth ahead of it. And going for that electric EV in the pickup truck market is going to be massive for it. And it looks like at the moment, with the pre-orders it does currently have, it's going to be able to smash it out of the park. But like I say, I've kind of got to wait. I've got to sit on this one for a year to see anything really. So I'm kind of being wary on this one. At the same time, I do think there's very big upside here. So it's one that I'm trying not to buy too much of and leave myself a lot of room. But I am, at these sort of prices, I had to buy a little bit more of a stake into the Lordstown Motors, so I did do that. And number 5 is Tattoo Chef. So I did buy some more shares into this one, carry on building that position up. For me, I actually see Tattoo Chef be one of the best performers in the short term on this list, because I believe that when you can see the catalyst of like why the share price is going to go up and how amazing these earnings are going to be. So for me, over the next kind of year, I don't know how long Tattoo Chef will be at this sort of valuation. So it is a company that I'm trying to build my position up a lot quicker than, say, something like a Lordstown, maybe a Gang. I'm trying to keep it at the same pace as something like a Heuer, for example, because I think in a year's time, when analysts start picking up on this, when hedge funds start picking up on Tattoo Chef, I don't think the company will be down at this valuation for long. When you compare it to something like a Beyond Meat, which I don't think it'll ever scale up to something like a Beyond Meat and their valuation, but I do believe it will trade at a lot more of a richer valuation than what it currently does do. And because of that and where it is, I don't expect it to be at this sort of price in a very short, over a year's time. I don't think we'll be seeing this around $18. For me, it's one of the ones that I would be more confident to bet on in the short term, and I want to try build up that stake very quickly over the next 3 months compared to something else like a Lordstown. So I am trying to buy this quite more often, but at the same time, with it being a small market cap, with it being a new SPAC stock, I do want to be very careful, because there will be opportunities, I believe, to get this at very cheap valuations, and I've just got to be careful of that one. So I am trying to buy this one quickly. At the same time, I've got to have patience to buy this at the right prices. So I did take some opportunity to buy some more Tattoo Chef, because like I say, I think when people start catching on to this company and it gets the headlines a little bit more after Q3 earnings, after Q4 earnings, Q1 earnings, I think this price will definitely skyrocket very soon. So Tattoo Chef is a company that I do want to carry on buying quite often, and yeah, I did buy a little bit more into this company. So overall, those are the 5 companies I bought this week. There was another 2 companies that I was very close to buying, as well as Hollywood Bowl. So I might buy a few more next week. I'll see what happens in general, but I still want to make sure I keep that 20% cash pile there for if it goes, seriously low here. So that's what I did nibble a few shares on this week anyway. So I hope you enjoyed that. And as always, smash the like button, subscribe if you've made it all the way to the end and you're new around here. And I'll see you next video.